The daily open is going to be from here, I guess. Hold on. Tuesday, 31st. Starts at 1800 on the 30th. Yes. Okay. And then the market closes regular time on the 31st. And then it opens on the 1st at 1800. So it doesn't open on the 31st at 1800. It opens the following day. So our previous day high is here to here. Previous day high. Previous day low. Alright, and what I'm gonna do is I'm going to actually move the replay back to here. Because of the fixed volume range profile, you'll see as you start to use it yourself and as it plays out in price, the volume will change a bit as you know more price prints, because it's considering the volume within that price leg. All right, and this looks like we opened up here and then we closed down here, so this was a bearish close, so our OTE is going to be bearish. All right, so this is the framework so far. Previous day high, previous day low, fixed volume range profile within that, and then our OTE levels of previous day high. So, ooh, it's pretty choppy up here, but we do have all this LR built up here, with the highest volume being down here, unfortunately. But up here, it looks like this area around midnight is most interesting. I'm just gonna shoot up to the 1 hour. Okay, so we have this clear 1 hour BPR up here, and referring to PM session, we have this close above here. So this is Q2. Q3 starts at 3, and then we have this change in state delivery occurring here technically in Q2. Let me change this to a BPR. So that's a 1 hour BPR up there, and I'm gonna drop down to the 1 minute just so we can see what that manipulation swing looks like. Yep, so it would have been just that singular candle on the 5 minute. I'll go back to show you in a second. What did I change his to? There we go. Okay, so this is the manipulation swing here. On the 5 minute, it's just this singular candle. So if you can't tell sometimes what the manipulation swing is, you can just drop down to the lower time frame to confirm that you know, you're like that singular 5 minute candle, that's it. So okay, so basically 4 to 4.5 deviations is right around our OTE level. Equilibrium of yesterday or previous day is around 2.5 deviations. So assuming that this manipulation holds, that is where we're looking to target so far as we go into the next day. So now let me play price forward and let's see where it takes us. So first thing we're doing is waiting for Asia. All right, so this manipulation, we reach, let me change this color. we reach up to 2 deviations, and then we have a full-on reversal. It takes out previous day low right here. And then we have our 5-minute CSD happening here, unless it goes lower. I'm going to mark that out now. And this is all irrelevant to us right now because we still have yet to see a Q3 manipulation. Okay, so this is our new 5-minute change in state delivery occurring right here. This is what my symbol looks like for a change in state delivery. It's just a pound sign. Okay, so this is when you see that on my chart, that's what I'm marking as a CSD. So I'll just mark this one here as well. Just technically this one, I'll just keep it to the 5-minute CSD instead. Okay, so we have this new CSD occurring, and this has now happened technically in Q1. Which there's no, I don't have it marked up, so I never have Q1s checked, so that's why you don't see the marking for it. So you can just we can just assume it's Q1. All right, so now since we're only testing Q3s, this is all irrelevant so far, and we're just gonna watch all of this play out until we come across a Q3 manipulation. And this will unfortunately lead to a lot of missed trades, right? But what I'm after, or what I'm hoping to achieve from this, is at least 1 trade per day. And then if we get 1 A+ setup per day, Adrian and I are both in agreement that that is plenty for this model, or for this backtest. All right, so what's happening so far is that we've reached to, nice cryptic, thank you. We've reached 0.5 deviations here, and we are having our first accumulation occur. 0.5 deviations is also known as low risk entry area. So when in the market maker buy model and sell model world, so when you get to 0.5 deviations, and then you see we've slowly accumulated up, and then we return to this level, this is what is known as low risk entry if we are in fact targeting these highs. All right, so far we've taken out PM session high here. In Asia, we have this 5-minute CSD, and it's now 11, so we're about to get a new true day open, or we already gotten it. Oh, hold on a second, guys. I have to change this. This is on UTC 4. It needs to be on 5 for the moment. Wait, that's 10. I went in the wrong direction. Oh, wrong indicator. GMT 5. Midnight is at 23. Midnight is, okay, sorry. Midnight is at midnight. Okay, great. Okay, hold on. Let me see if all this is correct still. So the CSDs don't change because the CSDs are CSDs. Still Q1, Asia session here. Alright, so yeah, it changes where the sessions land. So Asia opened, we took out PM session low, which is also yeah, TGT. I'm a little tired today. It's really the allergies. It's pollen season, so I'm always a little stuffy during pollen season. So we swept PM session low, which was also synonymously previous day's low. We have this 5-minute CSD occurring. The deviations are obviously the same, and now we've tagged lunch high, which is not necessarily a session of importance, but I have it listed on my charts. So that's really it. And we've also taken out Asia high right after midnight. Okay, so we shall continue. Up to 1 deviation. Now, if we're trading counter trend, 1 to 1.5 is where we will see a reversal occur. So we are now in OTE territory of previous day, or not quite, but we're in premium at least. So we can start to see a reversal occur at any point. We're now in Q2, and we are approaching London. All right. All right, so in Q2, what I would have had listed up until this sweep right here is I would have had this deviation marked out. Low is 379.50, 379. So I would have had this deviation because this is a CSD. Of course, it gets swept in Q3, which is very common. So a lot of you guys have asked, how do we trade this live? This is an example, right? Usually if we're generally speaking, Adrian is watching for a Q2 or Q3 manipulation in his like everyday trading, not necessarily what we're trading, or I mean what we're testing, but in his everyday trading, he's watching for a Q2 or Q3 manipulation. Before we had this sweep up here, which is actually pretty obvious in this case because we know there's a 1 hour BPR here. This is also, you know, previous day midnight, and then we have our OTE levels up above, so we know that we want it to go a little bit higher. So it's a little suspicious whenever price goes up to our quote-unquote key level and then misses it. This is what we call inducement, where it's inducing early shorts. So whenever this happens, you should always wait and not chase it. But up until this here, I would have had this marked until it was invalidated. So it's invalidated on that spike up. We've now tapped the 1 hour BPR. We are also now into OTE. So now we're looking for displacement down. Great. So now we are in Q3 as of 3 a.m. So as of this candle, right, our CSD would have occurred here at these candle lows, and these would be our standard deviations, and this is our zone now, our Q3 manipulation zone. All right, so we've come up to OTE of previous day. This is our zone, and these are our deviations. So previous day low is around 2.5 standard deviations, and current day low is around 3 standard deviations. And there's nothing to the left on, okay, here we go. So 4 to 4.5 is probably within another manipulation zone. Yes, a manipulation zone down here. All right, so now what we're looking for is we've already had displacement because we already have a fair value gap printing. We're looking for a return to the zone. As soon as a swing low forms, we can pull OTE. Ideally, what we would like to see is SBS form here, so that we can have the full SBS play out. All right, so there's our swing low. So this would be 1, 2 so far. I'm gonna pull OTE here just to have it up. Okay, so it misses EQ. So this is exactly what I was talking about, is that we are requiring that it is EQ inside of the zone. So just because we're tapping the zone, which is an entry for Adrian, to be clear, he does take this trade from the zone itself, but it's A plus when it's OTE, or sorry, EQ, at least any one of these levels plus the zone, right? So what we could be seeing here in SBS terms is 1 with the break of structure, 2 with this pullback here, and we don't know how far it's going to pull back yet, but I don't know, 3 down here maybe, all these equal lows, and then 4, 5 in SBS terms. So we're not going to take this because it didn't hit EQ. Let's see if we get a tap there. Okay, great. So now we do have a tap, and now we just have to see if it offers enough R. So the short would look like this. We have EQ, and so this would be entry 2, or this would be SBS 2. But our stop loss would be at the high of the zone, and then we would be targeting any one of them. So we can target 1.5 standard deviations, 2.5, which it has already. Oh, sorry, this is the previous deviation. What am I talking about? We can target 1.5 as the very first target. This would also be aligned with Asia low. So this alone, this trade alone, 2.4 R. That's enough to take. That's enough to take the trade. And then if there are other opportunities, for example, when we have 4 and 5, we'll be able to take those as well. So we have that tap there. All right, so now we have 6.8 tapped, and it has missed OTE so far. Ooh, let's see if it hits 0.79. It does. Okay. So what Adrian does, okay, this is looking like we're gonna get stopped out. What Adrian does for these trades, he usually waits for 4 or 5, I think, for the SBS entries. But if once he does enter, what he does is he has one account targeting 1.5, another account targeting 2.5, another account targeting 3.5, and he's added on the 4th account for 4.5. All right, let's see here. All right, so we have 1. We still don't have 2 technically because we don't have 3 for SBS. Wow, this is crazy choppy. We're now, okay, there we go, stopped out. Okay, so hold on a second. 1, 2. All right, so I don't think technically we can track this because we don't have a confirmed 2 with 3. So we need the 3. I don't know if you guys are familiar with SBS or if you guys have been following, but in order for us to know where 2 is, we have to have 3 first because we need the sweep of 3. Of course, I was just, following it, assuming that it would enter. And then a 4 is a sweep of 2, and then 5 can either sweep 4 or be a failure swing of 4. But this would be the double tap within this zone, basically. So this would not be an entry, unfortunately, because we don't have that confirmed 3. But I think technically, let me think about this. Because if we're taking the entries at 2, we're never technically going to have the 3. So then we would only enter at 4, 5 technically. But do we just forego the 2? Yeah, this is recorded. GRC. I think we're gonna have to record it because if we do, I do want to record the 2 entries. Okay, yeah. I'm going to record this as a loss because we do want to see the entries of 2. Like we want to be able to predict them, let's say. So no, well, there's no 0 because 1 is always the breakup structure. So we're just assuming that 2 hits, right? And again, the way Adrian actually trades is that he's not necessarily requiring OTE. He actually just only requires the zone. Now, this is where, and I can ask him, I'll just send him a message really quick. When he requires the break out of the zone, he does require a fair value gap. So I want to ask him if this fair value gap was enough for the entry, or if he wants the fair value, if he wants the displacement to occur out of the zone specifically. So let me just ask him this question really quick. He's actually messaging me, so let me send him a message really quick. Okay, we'll await his answer, but we've actually GRC, yes, this is what we're doing for quarter 2. I'm pretty sure you've been in the previous sessions in which we've gone over the model that we're testing for the next quarter, but basically we're testing Q3 manipulations, 5-minute CSDs with 4-hour candle expansions. All right, so I'm waiting for his answer. We shall see what he says. I'm pretty sure, I'm pretty confident that this is enough, because this is a pretty solid manipulation and it's happening at OTE. But basically, the only way that this could be wrong for a 2 entry is if he's expecting displacement down here, for example, or like coming out of the manipulation zone. So I'll wait his answer. In the meantime, I will go ahead and track this. So this would theoretically be 1. And then 2. And that's all. Oh, it doesn't let us mark it that way. Darn. Let me do this. I'll do it manually. 1, 2. And we can use a call out. No, call out's too big. I'll use, there's another one. I think the comment. Sure, let's just go with that. 1, 2. Oops, 2. Alright, so let me capture all of the context here. So we have previous day high, previous day low, fixed volume range profile, OTE, plus the 1 hour SBS. Okay, I'm gonna take multiple charts in this just because it looks like we need a big picture. So I'm going to take this big chart so that we can see the daily context, and then I'm going to also zoom into just the entry for the data collection. All right, so this is our first trade. Obviously NQ. Oops, didn't mean to do that. This is January 2nd, by the way, guys. So, you know, post-holiday price action. January 2nd. Adrian agreed that the beginning of the year is fine. This day is what? It's Thursday. We were short. The entry occurred at... We were just demanding EQ. So the entry occurred here at 3:45. Not a bad time to enter. And we were stopped out at 6:40. Ooh, 3-hour hold. Hey Lanto, how's it going? Thanks for joining. So shy of 3 hours, that would be 2 hours and 55 minutes, 120, 175. And this would be part of the 2 a.m. to 6 a.m. candle, primarily. So we're only testing these 3 4-hour candles as well. 2 a.m. to 6 a.m., 6 a.m. to 10 a.m., and 10 to 2. And let me actually backtrack here. I didn't look at all of this. So, okay, prior to our entry, we did have a down close candle. And the 4-hour candle was retracing. We do have a 4-hour order block there. Okay. So, look, based on what I just saw, it looks like it is going to play out, but it's going to sweep highs one more time first. So, it'll likely be the AM session Q3 that plays out. And let me continue tracking here. The quarter of entry was Q3 as well. PD array was a fair value gap as well as an OB. This OB right here, which is the CSD. Adrian has not replied yet, so we'll just keep going. I'll wait for him to answer, and then I'll know if we need to keep this entry in or not. So this was 2, 5. Okay, we need to add an NA here because we never got 4 and 5. I'm going to make this, and the sweep will do red. Is there a specific time window we want the trade to be done in? Yeah, because it's a 5-minute change in state delivery for a 4-hour expansion. We want the 5-minute change in state delivery to occur during Q3, and we're looking to catch the 4-hour candle expansion. So hopefully in the first 30 minutes of that 4-hour candle. And we want it to be done by the next 4-hour candle. Oh, we don't have a time frame to cut it yet. I do have a duration column. Cryptic. I do. Here. I always have a duration column for what it's worth, because I want to know how long I'm holding that damn thing. And this would have been, we entered here. I guess it can't technically, well, OTE was hit during the macro. Okay, yeah, so I'm gonna do 350 to 410 macro. Technically. And we didn't achieve any of them. No R, or -1 R, actually. -1 R, OTE to deviations, also none. We achieved none. It didn't expand down. We got straight up stopped out. Okay, and then this is the chart. Or let me just grab a new one. So far, I think what's really what's going to be really cool about this is that we can actually refer to Adrian's charts because he documents all of this, which I think will actually bring home the point to all of you how important it is to journal your trades. So now I take a closer chart. So let's really quick refer to Adrian's journal and see if he has it here. So we'll go to Adrian. Alright, so in Adrian during January 2nd. Oh, look, SBS complete here. Higher time frame SBS. So this was a 4-hour chart. Oops. Oh, darn. Closed the wrong one. Hold on. History. But why 5 minutes when the alignment for 4 hours 15? Or because this is his model. Because this is what the way we trade the model. Okay. In one more time, Adrian during the first. Wait a second. What happened here? What happened? It's gone now. There's no post. Oh wait, it's the wrong date. That's why. The second. Okay, here we go. Alright, so see, he has the same exact manipulation level. And then into Q3, he marks out 312. Oh, this is interesting. We actually just went over this chart the other day. So then he doesn't actually mark out this manipulation level down here, right? And oh wow, I wish what's his name was here, Yerm. Okay, so I mentioned to him that this would actually, I would mark out this because it's a Q3 manipulation occurring here. We obviously get stopped out, but here's a new manipulation that's going to play out during the 6 a.m. candle apparently. So now we kind of technically have the answer, but I wish Yerm was here so he could see that I was approaching that mechanically. Okay, so we're not going to form fit here, right? Because Adrian obviously had this manipulation marked out. And so what I'm thinking as we approach this 1 to 1.5 level, as well as OTE of previous day, is that this is where the manipulation can occur mechanically, okay? So again, the framework, we have previous day high to previous day low, 0.79, 0.705, 0.618, 0.5 of all previous day low, of all previous days action. So these are the retracement levels that we're looking for if we are going to continue bearish price action, right? And this is where this manipulation is occurring within yesterday, or within that context of that daily context, as well as 1 to 1.5 being that this is where the manipulation can occur if we are trading counter trend. So again, I'm not form fitting. I'm only approaching this mechanically, and this is what I saw in real time, and we just simply took an L. That's that, right? So now we move on to the next rep. I think I've hold on, wrong. I think I've tracked it all correctly here. So I'm just gonna put here no displacement. And again, okay, Adrian replied. 1 second. Okay, great. And he confirmed that the displacement is correct here, or we did see this correctly with the displacement being inside the zone. So this here, this fair value gap that we saw right here, this is enough displacement. It doesn't need to be outside of the zone. So we're good. This is a solid rep here. Again, just approaching it mechanically and taking it from this Q3 manipulation. So that was a good rep. That was indeed correct. And I can delete this one. We'll clean it up a little bit. I'll also delete this one since it ended up being wrong and not delivering. So now we're still working off this deviation right here. All right, so it continues up. We're going to play. We're now in the next 4-hour candle, and we're in Q1 because Q2 hasn't printed yet. All right, and we now have a new change of state delivery occurring here. And this is a sweep of 0.79. So one thing I want to say here about deviations, if we were to sweep 0.5, right, This entire area from here to here is 0.5. Let me just use a box. So when we're talking about deviations for the rest of the backtesting, this entire area would be 0.5, right? And then this entire area would be 0.618. And then this entire area would be 0.705. And then until we actually take out the entire deviation, 0.79 to the high would all be considered 0.79. Okay, so when we're like tracking this for data purposes, even if it comes close to 0.705 but it misses it, we're not counting that as 0.705. All right, so deviation here, we have Q2 now printing. So even though this manipulation, as we saw from Adrian's chart, may play out for sure, we are not taking it because it's not originating from a Q3 manipulation. We can take it if we get another manipulation in Q3. If that makes sense. So far this is our zone, for example. Q2 or not. Q2 manipulation. I'm just gonna put Q2 zone. We know it's a manipulation. Alright, Q2 zone, and then this would be our 1 breaking structure here. 2, 3, and then returning to the zone, 4 and a 5, right? Now our OTE would be 1 to 3. And now this entry at 4 technically meets all of the criteria, except for the fact that this is not originating from a Q2 zone. So we unfortunately cannot take this trade. And this is definitely going to happen in this test, I can tell you now. Adrian and I have discussed this at length, whether or not this was the right decision. But again, the data just shows that 2 deviations is mostly met from Q3 manipulations. So I'm opting to stick to the high probability data. Normally in all of our previous backtests, what we've done is we start with a very basic model, and then we've refined along the way to make it much more high probability. In this case, we're actually starting from a high probability model, and we're only testing that model, which means that it's going to eliminate a lot of reps. All right, so we didn't get a 5 actually. Let's see if it comes back. So 6 is when it sweeps 3. We never got a 5 here. Q3 is now there. So we want to see... by yourself, you mean you guys singularly without me? Yeah, you could. Darn. This thing delivered. Okay, so that's just the way this is gonna go. For sure. Okay, so we now have a new Q3 manipulation here. Hold on a second. That was nasty. Wild. Okay, so this is a signature though that I want you guys to see, or it's a note for your own trading, and you know, by yourselves, is that notice that we had this zone here marked out, right? Because this was a Q3 manipulation zone that occurred during London. Then we traded up pre-market. Q2 we have a new manipulation zone, and then or this technically, yeah, Q2, because we confirmed it here once we in Q2, like once we close below it, and then we displaced through Q3 manipulation zone, right? We displaced through it. We didn't close below it, but we did obviously displace through it. And then look at this retest right here. It retests EQ of that manipulation zone and then dies. And this is a signature, like if you see these zones getting flipped, that's something to note. And I do think this does apply to the microcycles as well. So if you see like a Q3 inversion, for example, on the 22-minute cycle quarters, I would recommend, you know, reading the narrative like this if you can. or if you'd like. All right, so Q3 here, we have a new manipulation zone. Go ahead. I'm with you. I'm just gonna start clearing up the chart a little bit. Or maybe I keep that on. Yeah, I'll keep it on. It's gonna start getting a little messy though. Go ahead, Cryptic, I'm waiting. After flipping the Q3-1, did you say a retested EQ? Yeah, look at it. So we displaced through this zone, right? And then we print order flow below EQ of the zone. This line, this dotted line here is 50%. It's the midway, right? So of this manipulation zone, 50% we displaced through it, then we print order flow, right? This here, when we sweep this order flow, this is inducement. It's inducing longs, right? And then after that inducement, where it's running buy stops, because people have evidently trailed their stops to up close candles in bearish price action. If they trailed their stop here, they went to go sweep that stop, retesting EQ, this dotted line again, and then it displaces and dies. And this happens, like, for example, this, I'm not trying to go, like, you know, keep me from going off on a rant, guys, because I can do that very easily. But any key level, this is the these are signatures that you're looking for. So this key level can be previous day low, it can be previous day high, it can be previous month low, previous week low, PM session low, AM session low, lunch low, and this is the signature. It displaces through the level, prints order flow, retests it or run stops, and then displaces away from it. Here, Asia high, we print order flow above it, we come back, retest it. Asia high, this blue line right here, we print order flow, we displace, we retest it, and we continue up. London high, we print order flow, we displace, we retest it. Obviously it ends up failing, but this is a signature that happens all the time. So when you're breaking above highs, are you printing new order flow? When you're breaking below lows, are you printing new order flow? This is how you start to develop narrative for yourself, like as you're reading price action discretionarily. All right, so here is the 1 hour for Q2. I don't know what you're talking about. Bodies where? I use the whole range. So this was the original zone right here. This is currently low of day that's holding. This is Asia Q1. But when looking at a change state delivery, use wicks or bodies. We use wicks. Yes, close above it. Close above the wicks. Okay, thought you saw the body on the last Q3. No, this is the wick. Wick to wick. Well, there's no Q3 here. So if you're talking about this, this is also wick to wick. So bearish change of state of delivery, we're using the down close candle. Here. We're on January 2nd. And let's just, oh, Adrian actually pulled his deviation all the way to the swing low here. And we have this one the exact same. Hold on a second. I guess because they're all inside candles. This down close here. Okay, hold on. Let me just... He pulled it to this one here. Okay, hold on a second. This changes it. Let me just go through this. So we have... Back this up. We displace out of it here and return to it there. Oh my goodness. So the zone would be all the way down to there. Alright, so I did actually ask Adrian about this recently because I asked him if we're using the swing high to swing low, swing point to swing point, because that's how I learned standard deviations from both ICT and Dexter. We both learned ICT, we both learned manipulation or standard deviations from the same people. But what differs is with his model, he actually just uses the change of state delivery. So I asked him directly if we're using the standard deviation from swing point to swing point or just the CSD. He did say just the CSD, but he has the zone marked as this entire swing up as opposed to just this CSD occurring right here. So I'm gonna have to ask him to clarify on this, and we're gonna have to develop a mechanical way to do this, because this is definitely what the standard deviation would be just to the eye. But according to how he taught change of state delivery within his mentorship, I would think it's this one. So he's gonna obviously watch this, so he'll be able to answer. But if we have this as our now new OTE, then darn, it doesn't come back until here anyway. So we still don't get it, because this would be the tap to the zone, and then it would die. So we still don't get an entry there, unfortunately. That's all I was checking. Alright, so I'll just leave that on as is. Let's continue throughout the day. Adrian, if you're watching this, obviously, please answer. So now we have 1 breaking structure here. 2, 3. So this would be 4. And do we get a 5? Okay, so now here, this would be, we would bring OTE all the way down. These moves are gonna get kind of crazy. Why can't I grab OTE? Okay. So these moves are gonna get kind of crazy because you're bringing OTE when you have the SBS play out. You're bringing OTE all the way to 3. So EQ is now down here. But again, we're demanding that we have a level plus plus the zone. So OTE, the first entry would be here, or the first entry would be here, and then we'd obviously, you know, we'd love to get this beautiful 0.79 level, which is kind of the level that we've all, again, between Adrian and myself and Frieden, we're kind of always trying to get this type of entry. So let's see if it goes all the way to 3 first of all. But this is where we would enter, and with this big range, let's see if it's, hold on. Let's see what the stop loss looks like. Oof. Okay, it is a 100-point stop. It's pretty a lot. It is 2.3 R though, so it is there. So 0.75. I wonder if... No, I don't want to make it more complicated. I want to keep it as simple as possible. It's already pretty hard to track with the SBS. Alright, so 4 would be the entry here. Let's see if we get a 5, if it comes back. Two deviations is here. 2.5 is here. So we'd want to see 3 anyway. 5 can be either one of these though, technically. Now that it's displaced away from 4, because 5 can either be a sweep of 4 or any one of these. Here's midnight. Okay, so there's the sweep of, there's 6, the sweep of 3. So now, okay, technically our target should be 2.5 instead of 3, because we're not targeting SBS levels, we're targeting 2.5 standard deviations according to this. Okay, hold on a second. Oops. So this would be 5 here. Yeah. From these 2 points. 1, 2, 3. That is where OTE is. You see the 2 dots? All good. I know, I mean, it's not, I'm also kind of hard to follow sometimes, you know, like I bounce around in what I'm talking about, so it's all good. I blame me. Okay. Okay, hold on. I'm just gonna play it through just to see how far it goes before I actually track the data on it. Because we're looking for a turnaround. Like another Q2 manipulation. Okay, so Q2 manipulation there. Oh, wait a second. I might even not be... We have Q3 here. It's not technically closed below until there. And this would be the change. This would be the CSD up. Okay, I can't track this anyway. We wouldn't be able to take this trade because of the Q2 zone. So unfortunate, but obviously we saw this play out. So that's gonna, I guess the experience alone is gonna be plenty to go off of from going through it. But we can't take this because it's a Q2 zone manipulation. So let's just play throughout the rest of the day and see. I was gonna track this as a rep. I completely forgot. So this is the SBS, right? 1, 2, the pullback. The reason this is 1 here all the way down to this point is because this is where the CSD occurs, according to Adrian's chart. And I'll ask him to clarify. Again, he's going to watch this back anyway. And then once we have 2 and 3 here, the sweep of 2 is 4. And then 5 does not have to sweep 4. It can also be a failure swing. So before it tags 3, we have another swing point, which was 5. The reason I'm saying it's not this one is because it gets swept again, which obviously we can see in hindsight. So it gets swept again, and then 3 gets tagged, and this would be 6 down here is when it takes 3. So now we're in the end of the day. There's nothing else to track here. This would be the next manipulation going into the next day's Asia session. So now I'm just going maybe I should clear everything first. I'll clear everything. So that's one day. I'm going to take a rough note of this on my end. I'm not going to document it in the sheets because it's going to be hard to keep track of that way, I think. So what I'm going to do is I'm going to keep a list of dates and reps that we missed because we're only watching for a Q3 manipulation. So far that was January 2nd only. And we missed one really super good trade because we were waiting for a Q3 manipulation. Alright, so now we'll just play it to 1800 real quick. Alright, there's the open. And again, this is what our daily setup looks like. So we are marking out previous day high to previous day low. And then we're taking the fixed range volume profile. I just want to make sure that I got this range correct. So the daily open is here. Yep. All right. So fixed range daily profile is under this guy right here. Fixed range volume profile, which Adrian abbreviates as FRVP. We're gonna bring it from our high to our low because the day closed bearish. This is where the open is, and it closed down here. So we know without looking at the daily chart that it closed bearish. And just to confirm, okay, this is playing the next day. Damn. But this is our previous day high. This is the day that we're working off of here. Is the second. Damn, we're gonna get rocked, guys, just based on what that just showed us. But this is our fixed range volume profile. Why are you long in the next day? Because you saw because you saw it. And then we're gonna mark OTE. So this is the daily setup. Is this correct then for the day based on SBS? 1, 2, 4, 5. For today's price action, yes, that is today's SBS. Both Adrian and I actually took that trade. If let me see. My trade of 8 won't cooperate with me, but let me see if I can find the proof to show you guys that I took that trade. Because I didn't journal it. Shame on me. Hold on, guys. Quick break here for me to go off on a tangent. 1 second. Trades from this week. Okay. Today's trade. Yes. Yes, 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 yes. So, quick sidetrack here. Today's SBS was this. It was... Adrian already shared the chart earlier in the chat before he hopped off, so you guys can go take a look at that. But it was 1, 2, 3, 4, 5. And again, I used the wrong damn tool. 1, 2, 3, 4, 5. This was a deviation. I used this one personally. Adrian used this one because this is the one with SMT. If you don't have this swing, I think I actually used this one technically. Yeah, I did. And then I've had the range up from here to here for OTE because this was the expansion leg up, and I targeted 0.618. So hold on a second. Oh, I entered lower than I thought. Okay, so I actually entered here, not on... I thought I entered on this candle, but it was the other small candle, this one. So I entered below midnight technically. It did go back to midnight. So I'm assuming then, because I drew a new manipulation. Oh, this was a new manipulation that I drew out when after that candle printed. And that's 1.5. Okay, yeah, that sounds right. So I entered on this candle here. I'm just going to take the open. Although I don't think my stop was that wide. I must have used this one, I assume. Because I definitely didn't take this one. I entered here. Or I thought I entered here. And I was explaining it to Adrian. So it had to be this one. Okay, yeah. So I'm going to assume that my stop loss was here. So 102 points. And I targeted this here. So just shy of 2R. 1.65R. This is the only receipt that I have because I was naughty today. I did not journal my trade. I didn't take a screenshot at all. I'll just share this in the You said, no, 5 does not need to be lower than 4. It can either sweep 4 or it can be lower. It doesn't have to be. But 5 is in the air. Because the market only turns 2 ways, AC. The market turns with a run on stops, or it turns with a failure swing, which is a return to fair value, right? So it's either the algorithm that we believe that is controlling the market does 2 things. It attacks stop losses, or it attacks fair value and imbalances. So it runs stops, or it attacks fair value. That's all it does. We believe those 2 things. If we believe that there's an algorithm. But 4 should take 2. Yes, 4 should always take 2. So in but 4, yes, 4 will always sweep 2. Okay. So yeah, so that was my terrible trade, I guess. I didn't realize, I really thought I waited for midnight. I guess I didn't. So I took this trade from here to here. I took it there at 9:04 and I exited by like, I don't know, I think it said 10:19 or something. 10:30. I exited at, no wait, that's the wrong trade. Yeah, no, 10:30. That's the right trade. So at the end of this candle, which is, you know, when it hit this. But, you know, overall, not a bad day. This was the only trade I took this week because the rest of it was just like, I couldn't. I wasn't on for this, obviously, because I get off after 11. So all of the AM sessions before this, I just couldn't get jiggy with. I didn't have a read. Yeah. GRC, sometimes I get the feeling you're not listening. This was my target right here. It made it to target. This was the trade. This is my trade. But this is exactly, so Adrian actually took his trade from this zone. So we had this whole thing mapped out for OTE. He actually took it at OTE. So he got in on the 825 candle. So, or 835, sorry. So he got in right there. So his entry was basically where my stop loss is. Like, that's goals. So he took it here and I didn't get in until down here. And he targeted, because his deviation was a little bit different, he used this deviation right here. So his entry was until his trade was until 4.5. So he got out on this candle. So just to show you his trade versus my trade, he took it from OTE on the 835 candle. Again, same framework, so I guess it all applies for recognition. 4.5 he was targeting here, and his stop loss, I assume, was at the swing high. I'm gonna assume. So he had a 3.6 R trade. Beautiful. And he got 171 points. That's amazing. So I had a wider stop, and I was 3 points shy of his target. Alright, so now tangent over. You got to target. No. Oh, thanks. Appreciate it. Oh, I see what you're saying. My bad. Sorry for misunderstanding. Alright, so previous day high to previous day low. We have our fixed volume range profile. We are now marking out OTE. Cryptic, you still didn't tell me why you were longing the next day. Alright, so this is our most recent deviation that we're working with from PM session. Oh, because you know something. Oh, okay. It's because you saw the answer. Alright, so PM Q3. Yeah, the failed TSD from this morning. Alright, so that's the zone so far. So let's assume this is 1 so far. 1. Hold on, 1, did this sweep. Low's at 59, low is at 58. So this did get swept here. This low got swept. Displacement said he said it can occur within the zone. We do have displacement there. Okay, well, let's just see. We don't have, this is a Q2 manipulation. So we're just gonna let this play out. So at 1 to 1.5, if it's going to continue expanding, we can expect accumulation or redistribution to occur at these half levels, which we do have here. We have an accumulation. So basically what that means is that at each of these half levels, you'll see something like this. You'll see a new AMD occur, right? Which ideally would be Q1, Q2, Q3, Q4. So Q1 consolidation, Q2 manipulation, like the Judas. So Q2, and then Q3 being the real manipulation, and then Q4 continuation. So this is what ideally you want to see, or in SBS terms, this would be 1 here, 2, 3, and then 4, 5 is what we ideally would like to see at all these at all these half levels. When I say that it's a new reaccumulation to distribution level, it's just accumulating or redistributing orders. All right, so which we have here. Q3 is here. This is the sweep that I was talking about. It swept it by 1 point. It's hard to see, but it did sweep it. We're in Asia. Officially in Asia. Okay, no displacement down. We keep getting up. So far this is the manipulation that I see only. It is... Ooh. Hold on a second. Q3 starts at 9. So we did get the close above it in Q3. This CSD here. So this is what I was talking about. Like, although that we're working, I wish Jerome was here. Although we're working on this deviation still, right? This is the original deviation that's still playing out. We do have a new manipulation that has occurred in Q3, right? Like, until this is invalidated, this is the new manipulation that has occurred in Q3. We have accumulated, or we expanded during Q1. We consolidated during Q2. And then we have this new manipulation that has now occurred during Q3. The reason I say it occurred during Q3 is because we actually closed above that change in state of delivery to confirm it in Q3. So now this becomes our new zone that we can work with. Asia. I'm gonna keep doing that. Asia, Q3. All right, and then this is our new deviation, and it's leading to 0.705 and 0.79 of previous day's price action, with most of the volume being at OTE 0.618. So 2.5 deviations lands right with that. All right, so again, if we want to see a continuation, we should be seeing accumulation and distribution happening at these 0.5 levels. Do we have SPS occurring here? We don't have a super clean displacement here. There is a tiny gap here, and inversion happening. It did obviously sweep 2 as well. So we have 1 breaking out of the zone, 2 being this pullback, 3, right? Because this is the break of structure that's happening here with the CSD. We have 2 this pullback, 3, and then 4. So 1, 2. These ranges look so tiny compared to the price action we've been dealing with. 5. So first, if we have this pullback here, and we have OTE, didn't reach EQ, and then once it expands into 3, reaching down into here would be an entry, as well as here. Oh no, that's not an entry because it didn't sweep 2 yet. So then 0.618 would be our 4 entry. Okay, hold on. Long at the sweep of 2. So then I can just put it at 2 actually. Our stop loss would be at 1, and we would be targeting 1.5. So we don't break even until 1.5R. This is actually gonna be hard. Gonna be a hard back test. This is gonna be harder than I thought it was gonna be. 3R. Okay, so we are already breaking even. I have to play price action significantly slower than I thought I did. I'll back this out. Okay, our trailing stop now would be here. As soon as we break 1.5, we are BE. That candle. Okay. Jeez. It looks so tiny. Alright, so now we have 5. Hopefully. Okay, BE. Great. Fantastic. Alright, so we're BE on that trade. We never did hit... Oh, we did hit 2R. Okay. So we hit 2R here. And we never got to 1 to 1.5. So let's see if this fails altogether. Or if this actually ends up being 5. Wow. So see, 5 can sweep 4. 1 is holding, or 0 is holding for this SBS here. I wonder, I have to ask Adrian though how he would enter on 5, how he would go about entering on 5. Because I think the best way that I would see this, because we are really interested in this 0.79 level. This is what ICT has taught as the soup level. So when you get this OTE level 0.618, and it doesn't even come to 0.705, it's almost predictable that it's going to come back for these levels. And with SBS playing out this way, I think it's also like we can say, okay, maybe like if it, I think really what's happening is if we miss these entries, Adrian is likely taking the 0.79 level. I can't imagine that he's demanding 0.79 off top. But again, I can confirm, and obviously he'll be watching this video, so he'll let me know. But first trade broke even. Okay, so let's assume we're taking the 0.79 level with the sweep of 4 for 5, and it would be the same thing. .79. And stop loss would still be the swing low. And we would still target 1.5 at a minimum. Okay. We're gonna go for it. Let's see if or BE. Okay, we are BE there as well. Probably need 6. Yeah. Oh, jeez. I keep grabbing the wrong tool. Alright, 1.5. Hold on. Yeah, we hit on this candle. Alright. Alright, we're at the 4-hour candle open now. So this would be 10 p.m. candle open. Ooh, BE again. Oof. Okay, so now this is interesting here. We got all the way up to 4R. We missed Asia high. We're still in, this is Q1 as well. So now it comes down for Q2 and makes a new manipulation. So this would be break even. Now, I want to preface here that we are actually not tracking this data. I'm just going through it with you, like as all the models are playing out, or how the model would play out, because we're not testing Asia neither. We're not collecting data on the Asia session. We're only collecting data from the 2 a.m. candle to 6 and blah blah blah. But that's crazy. So I'm interested in all of you that are here today. How many of you would have continued to hold at 4R? If you're already up this much, would you have held until your terminus at 1.5 or even Asia high, let's say? Or would you follow the model? Would you actually follow the model if you understood the model? Nice, Soy. Well, yeah, I'm pretty sure you would have held. I don't doubt you would have held. Ooh, that is wild. So it does go, right? It goes all the way up. It's just that we trailed at 1.5R, which is, these ranges look so tiny compared to the recent price action. Yeah, so GRC, the way that Adrian trades it is that he has one account going to 1.5, another to 2.5, and another 3.5, and another to 4.5, right? So the idea is that instead of scaling out, he's trading multiple accounts instead. Because what ends up happening is when you scale out, you're not getting the full return technically, right? No, not hedging. He's not hedging. He's holding. He has 4 different accounts, and he's holding. He has the same entry on every single account, and he's exiting at different levels on each of the account. Because if you take partials on one account, you're not technically getting 1R. Because if I have 5 contracts on at this point and I decide to scale out one contract here, when it gets up to here, that's no longer, 3R at that point, because I didn't keep my full risk on. So what he's doing instead of scaling out is that he has one account closing at 1.5, another account at 2.5, another account at 3.5, and another account at 4.5. So the way that turns out is that if he achieved target on the first one, then the rest of the accounts break even, for example, when it comes back to BE. If he achieves, 2.5, then that just reduces the amount of accounts that will go break even. But he's only breaking even. He's not like getting a lesser return. Or obviously, like if it didn't get to 1.5R ever, then he's just getting straight up stopped out. But if you go back and look at like all his journal entries, what's basically happening is that he's breaking even on 3 out of 4 accounts most of the time, or 2 out of 4.5 accounts. But that's not hedging. He's just taking the same trade on multiple accounts. Wow, it misses 1.5 again. So see, this is what I was talking about, or this is what we've mentioned before. When it gets to 1 to 1.5 and we're offside, this is when we can see the change in state delivery occur in the opposite direction. So we're now back at midnight. Let's see if it actually does CSD or wait, we broke even on this trade right here. So let me just move this out the way. And now I would use this as the CSD. Let's see if we get the close below ever. We are in Q3 now as well. We are in premium of previous day. We're not quite at EQ. Not quite at OTE, which is what I want to see. So we do get this close below. Now, okay, in this case right here, and again, I would have to, we're going BE at 1.5R, which is different from my risk management cryptic. I reduce my risk by half at 1.5R, but Adrian completely takes it off the table at 1.5R. So my risk management is half at 1.5 and then BE at 2R. So I wouldn't go BE until here. It obviously in this case would have led to the same result, because he goes BE here, I go BE there. So we would have both broken even on this trade, although I do also take money off the table at 2R. In this case right here, it also would have had the same result, because at 1.5 here, 2R here. Yeah, I still would have broken even. Okay. So now I'm just gonna cheat really quick and look at Adrian's chart from this day as well. Friday the 3rd. The reason I'm going to do that is because the standard deviation for me in this swing would be this swing high to this swing low. But the CSD occur according to Adrian and how he taught it in the mentorship, I believe would be here. Would be, sorry, not that one, this one. I believe would be this. Why do I keep getting it wrong? I believe would be this candle here. But I'm gonna go peek at his chart and see. And he does it at the small one. He does do it at the small one. On the 3rd. Yeah, he's using this one. Hold on, let me double check. Yeah. Sorry, it's actually this one here. So we already saw he got stopped out on that. We're gonna pull this deviation here. This is happening during Q3. This would be our zone. I think back then he was just entering on the top of the zone anyway. I don't think he was demanding more than that. I'll just put that right there. And this would be London Q3. Alright, this is the last rep before. Every time I say Q3, Siri thinks I'm talking to her. My phone keeps going off. I had a huge misunderstanding as I was surely not paying attention. I thought Adrian goes BE at 1.5 standard deviations. No, 1.5R. Hold on, let me see if it's in our messages. I can double check. BE. I asked him. Okay. SD 1. Oh, you're right. Oh, shoot, you are right. No, you're right. I misunderstood that. Okay. I need to pin this message too. Hold on a second. Let me pin this between us. Okay, so this was the first set of questions that I had for Adrian that we got from like all of our Q&A together as a group. Oops. Let me click back into our chat. Dude, yeah, no, Cryptic, you got me. Okay, so damn. Okay, we're gonna have to call today a wash. Today was just really rough. Alright, so first, standard deviation, swing point to swing point, or deviation of change in state of delivery. Deviation from change in state of delivery only. See, so this is what I was talking about in all the CSDs that we've been looking at so far. Trailing stop method, SD 1.5. Tough. And then another question, using macros to align the model with H4, H1, OHLC. So we're good. Okay, so we might have to just, I'm going to look back at this first rep here. We're just not even going to, again, we're just kind of going through price action because we have to see when the model is going to play out anyway. Let me go back to this first rep and see if this was done correctly. Okay, yeah, no, this one was fine because we never even reached any of them. So we're good. This was just a straight up loss. No, I appreciate the correction. Great, that's fantastic. All right, guys, we've been on for 2 hours now. Unfortunately, we didn't get that much done, but all good. This was fun anyway. So I will be here on Saturday at 12 p.m. It will likely be a very, very long session because we actually haven't gotten any testing done. So I'm going to likely stay on for about 4 hours unless you guys exhaust me to death with questions. So unless I end up in the zone where I am just lecturing for hours, we're going to try to stay on as long as possible on Saturday to actually get some reps in. Okay, good stuff. Great. All right, guys. If you guys don't have any questions, if you guys don't have any questions, I'm gonna go. I think we're good though. That was so. Again, this is basically what we're trying to do. We're trying to pair the 5-minute change in state deliveries with the 4-hour candle expansions. And it just so happens that these 5-minute change in state deliveries are occurring within the macro that's transitioning us into the next 4-hour candle. So that's basically like the very basic description of what's happening, okay? And then how we're applying the macros to that is basically the SBS or accumulation and distributions that are occurring at these 0.5 levels. My pleasure. All right, guys. See you Saturday. Cheers. Have a good night.